A woman and a man walk into the same bank. Same income, same credit score, same job title. She walks out with a higher interest rate, a lower credit limit, and a checking account that's quietly bleeding her. He walks out with a relationship manager's business card. This isn't a glitch, it's the product. And once you see how it works at every level of wealth, you can't unsee it. Let's walk through it. Start at the bottom. She's 23, makes $42,000 a year, lives paycheck to paycheck like most of the country. Her bank account is free. That's what the ad said. Free until the rent hits 2 days before payday. Then it's a $35 overdraft fee. Then another. Then a third, because the bank reorders her transactions largest to smallest, so more of them bounce. Women pay more overdraft fees than men. Not because they're worse with money, because they have less of it sitting in the account as a buffer. And they're the ones paying for groceries, the kids' stuff, the household, while the deposits land slower. Her credit card? She got approved for a $1,500 limit. Her brother, same job, same score, got $4,000. She'll find out years later that algorithmic credit limit decisions tend to give women less, even when the inputs are identical. Apple and Goldman Sachs got investigated for exactly this. She doesn't notice any of this. It's just life. The fees feel like her fault. The low limit feels like the bank being careful. The bank isn't being careful. It's being profitable. And the cheapest customer to extract from is the one who already thinks she's the problem. She moves on, gets a raise, thinks the next tier will be different. It won't. Now she's 32, married, dual income, buying a house. The bank loves her, on paper. In practice, studies on mortgage lending show women pay higher interest rates than men on average, even controlling for income and credit. Single women pay even more. Compound that over a 30-year loan, and she pays tens of thousands more for the same house. Not because she negotiated worse, because the system priced her worse before she walked in. Then there's the joint account, the default, the thing every couple does. Her paycheck goes in, so does his. But the bank's records, the credit history that grows from that account, the relationship the branch builds, all of it skews to whoever's name is listed first, usually his. If they divorce, she walks out with half the assets and a credit file that looks thinner than it should. Because the bank was building him a customer profile the whole time, not her. She thought she was a co-signer on a marriage. The bank treated her as an accessory to an account. And here's the part nobody mentions. Until 1974, she couldn't have gotten a credit card in her own name without her husband co-signing it. That's not ancient history. That's her mom. The infrastructure she's banking on was literally designed without her in it. They just changed the rules. They didn't rebuild the system. She keeps climbing. Surely at the top, things are different. Now she's 45. Household net worth, $3 million. Private banking client. She walks into the office. The banker greets her husband by name. He's already on a first-name basis. She's the wife. The investment recommendations are pitched to him. The estate documents default to him as primary. The tax strategy gets walked through with him. She's invited to nod. When she asks a question, the answer is shorter than the one he got. Women control, or will control, trillions in U.S. household wealth, and that share is climbing fast as boomer husbands die first. Women outlive men by about 6 years on average. The banks know this. They've been warned about it in their own industry reports for a decade. They still treat her like a +1, so her money sits in cash, more of it than his does. She's risk-averse not because she's bad at investing. She's risk-averse because nobody ever sat her down and walked her through it the way they walked him through it. Cash loses to inflation every year, quietly. At the bottom, they overcharge her. In the middle, they undercredit her. At the top, they underserve her. 3 tiers. Same trick, different uniform. Now here's the part they really don't tell you. Banks don't have a women problem. They have a women product. The fees, the limits, the rates, the cash-heavy portfolios, those aren't accidents. They're a business model. Women are statistically more loyal customers. They switch banks less. They complain less. They tolerate worse terms longer. That makes them, in banking language, high lifetime value. In normal language, easier to charge more, for longer, with less pushback. So the bank's algorithms, the relationship manager's incentives, the default account settings, the mortgage pricing tables, none of them need to be sexist on purpose. They just need to optimize for profit. And the data the system was trained on is decades of women being treated worse. So the system learns. She'll pay more. Charge more. Here's the trap. Every financial advice video aimed at women tells her to budget better, save more, cut the lattes, stop emotional spending. The framing is always, Fix yourself, and the system will work. But the system is working. It's working exactly the way it was designed. She's not failing it. It's billing her. The gap between what a woman pays for the same financial product as a man, compounded over a lifetime, is somewhere north of $1 million in lost wealth. That's not a budgeting problem. That's not a Starbucks problem. That's a structural transfer of wealth dressed up as a personal finance failure. And the most profitable thing the bank can sell her is the belief that it's her fault. So, what do you do with this? You stop thinking of your bank as a partner. It isn't. It's a vendor. And like any vendor, it's pricing you based on what it thinks it can get away with. You open accounts in your own name. Always. Even if you're married. Especially if you're married. You check your credit limits against the men in your life and ask why. Loudly. In writing. You move the cash that's losing to inflation into something that isn't. Not because investing is empowering. Because cash is how they keep you small. And the next time a finance app tells you the reason you're behind is the iced coffee, you remember. The coffee is $6. The system is $1 million. Guess which one they want you talking about?